Those that don't know me, my name is Jon Shrum. I am a residential mortgage lender. I'm also a private money and commercial lender. So what that means is that folks, for whatever reason, have an issue getting financed, we can do a private money loan. Private money loan means that it is not backed by a correspondent lender. It's not backed by a bank per se. They are private investors, but they will impound a loan for you. There's a servicer that you send your payments to. You sign escrow loan documents just like any other person. So we're doing a lot. We're seeing a lot of private money earlier in the year with the pandemic because of people being self-employed, not working necessarily. On our private money side, though, we have no prepayment penalties. The reason I'm bringing this up is because it has been a lot that we've done at the very beginning. So with no prepayment penalty, once people are back to work, then we can get them back onto a normal loan. That's the ultimate goal. Commercial, I have a partner who takes care of the commercial for me. It's not something that I know enough about to be dangerous, so I send it to my partner who takes care of it. And in residential, it's really my bread and butter. So that's for anyone who is looking at purchasing up to 4 units and below. First-time home buyers. FHA, VA. VA is close and near and dear to my heart. It's something that I love to do. VA loans allow for 100% financing. So there's no mortgage insurance ever. And this is for our veterans and also for our men and women that are still serving. So I've been in the industry now. I'm older in mortgage years than dirt. I've been doing it for close to, I actually counted them up to 22 years. It's amazing. And the first 10 was just trying to figure out what I was doing. So I started out with Countrywide. That's what I started with, which was a great company. But I started out at the cusp, and when we were going into a brand new refinance market. We were in that refinance boom. And people were making money like they had no idea the amount of money that was coming in. But also people were qualifying for a loan. Basically, you just had to breathe on a mirror. I'm not kidding. So I learned a lot. I learned a lot about what you shouldn't do. I learned a lot about what you should do. I made pretty much every mistake I could my first year. And then through Countrywide, we went into our 2008, and we all know what happened then, right? So I went from making a whole lot of money to not making enough money to survive for the most part, but I went into the federal lending because Countrywide was bought out by Bank of America. So by then I've been in the business probably about 3 years or so, 3 or 3.5 years. And Bank of America was a completely different world. This is federal institutional lending. And there's much different guidelines. There's it's mandated, right? Somebody's regulating what you're doing. So you take the good and the bad from everything that you've ever learned. I've done the correspondent lending, I've done the federal lending, and then I've done the broker lending. So if anything, I've learned every different aspect of the industry, what we can and can't do. So where I live now, I am an independent mortgage broker. I own my own, but I also have banks that I work with. I have 52 different investors that I work with right now. Probably at any given time, top 10 is what we work with. But I have a box for everyone, right? What I found in the federal world is that if you don't fit in this box, federal institution box, right? If you don't fit there, well, then you're not going to get a loan. The world that we live in today, you have to have options. Not everyone's going to be a W-2 engineer putting 20% down on a $400,000 home. Well, we live in California. Come on, folks. We're going to get to $400,000 nowadays. And who is just W-2? The majority of my clients are self-employed. 90% of the folks that I work with are self-employed, whether they know they're self-employed or not. And I'm not kidding. You know, right? So they'll go, no, I W-2. I W-2 myself. Hence myself, right? So you W-2 yourself, and your W-2 says you have to make $500,000 a year, but you're negative $1.5 million on your tax return. I've seen it. I've seen it, right? So how do you help someone like that? Obviously, they're making money. They're allowed to write off what they can write off on their time. There's one-time losses that they can write off, but how do you help someone like that? Well, then you have to get creative. That's where our trust loans come into play, which Mr. Mark knows quite a bit about. Set off readiness and trust. Trust income, distribution for financial planners, right? From your financial plan that you have existing. This can be used for income. Bank statement loans can be used for income. I have a program now that's only 3 months bank statements, and someone can take their deposit, a large deposit on the 3rd month, deposit it into account. It's not seasoned. We don't ask where it came from, and that can be used as income. right? So this is ways of getting creative, but you're still within the realm of where you need to be while we're not doing something unethical. But we have to get creative nowadays to do that. So some of the things that just happened that we've had, the most recent updates are the loan amounts for Orange County and Los Angeles. Our conventional conforming has been increased. What that means is now people can buy more for less, right? So it's up to $842,500 in Orange County and Los Angeles. That means a loan amount up to that, you can put 5% down now. That's a good thing. It's a very good thing because our prices keep moving up. As Mike knows, there's very, very limited inventory out there right now. If you don't have inventory, people are bidding $30,000, $40,000, $50,000 over the asking price. Well, what's going to happen? Values will keep going up, but eventually that's going to stop. So what we've come out and done by doing this, by Fannie Mae and Freddie Mac increasing these loan amounts, it means that now people can afford to purchase those properties with less money now than they couldn't before. Okay? So important things to know: conventional conforming $842,500. FHA loans for anyone that's looking at buying FHA, first-time home buyers. That is again $842,500. VA loans. There is no cap to a VA loan now. There used to be county limits on VA. They don't exist anymore. So someone can buy a $2 million, $3 million home on a VA loan. Not necessarily put 100% or put no money down, but I did one for a 3-star general. It was a $1.5 million purchase. He put 2.1% down. To me, that's amazing, right? At the end of the day, my job is to put people into homes. That's what we do. It's either putting them into a home or helping them in some type of debt situation or reducing their interest rate. Right now, rates are phenomenally low. They still are. We're still 0.5% lower than we were last year. And last year was unbelievable, right? We were seeing interest rates in the low 2s, which was just phenomenal. So if you know anyone right now who's looking at purchasing a home, who needs to do debt consolidation, they need to pay off those credit cards because they were living through the pandemic and now they're booked on those, right? And they need to get that debt removed. Or you know someone that just needs to do a rate term and reduce their interest rate, and have them give me a call. Jon Shrum, making your dream of ownership reality. Thank you.